In today's video I want to show you a rather rare market maker signature that appeared on the Euro-Dollar chart 1-hour timeframe a little more than 2 days ago. I usually call this signature twin thrust because two identical candles appear on the chart around the manipulation area. Before I get into the reasons that sustain this idea, let me briefly explain what's going on in the chart so you can have some context. You should observe the price movement from 1 to 3 as a rocket that shoots up, then it loses momentum and starts to plummet towards the ground again, forming an arc motion. When retail traders see price falling hard like that, they immediately think that low number 1 is a good place to place a sell order. Part of the intuition that price is indeed falling hard is created in the market vector after the fractal candle marked by the downward red arrow. Immediately after the fractal candle we see price behaving in an organized motion in the candle level, creating lower highs and lower lows with each candle. This is obviously a large trader dumping huge short positions to the downside with each candle that opens. When retail traders see that, they tend to forget about everything else that is happening in the chart, and the only thing they see is the low number 1. In fact, they are so sure about the downward momentum of this market that they place a sell stop order right below low number 1 with a tight stop, which is just the icing on the cake for the market makers in number 3. Large traders are well aware that retail traders are preparing themselves to short low number 1, so they purposefully drive the market a few pips below number 1 to trigger the cluster of orders in that area. Since there are too many sell orders in the low 1 level, all of a sudden there is a huge demand opportunity, which is of course taken by the large traders who created this movement in the first place. Once the order cluster is triggered and the liquidity pool gets way deeper, the large traders assume the opposite position of the market, which is to go long with full force. The twin bars signature is the representation of exactly that. The first bar or candle up is a massive volatility candle that shoots up, but the market returns to low 1 level again because the large trader who is manipulating this market might not have employed the sufficient amount of capital dumping to surpass the point of no return of this manipulation, so to speak. The result is that the large trader has to dump capital one more time in the market, and that's how that second large candle appears. Needless to say, at this point the retail traders that were looking to go short are already stopped out, and they are all ready to recover from their losses by trying to scalp the market in one way or another to the upside, since now they realize that they were mistaken about low number 1. Ironically, this only helps the large market makers' long position to increase to the upside. Beyond this rare type of manipulation, which is already pretty interesting, I also drew an upsloping blue pitchfork on this chart using the 3 green circles as axes. The purpose of this pitchfork is to pinpoint an area where the energy of market makers is likely to run out, which is exactly what happens in the third red square I drew on the chart, which also happens to be roughly in the same level of the turning point line right before the fractal candle that initiated the whole manipulation. As you can observe by this simple example, we can find order in what appears to be complete chaos on a price chart. All you have to do is to employ the correct analytical tools to increase your level of resolution, and then you will be able to see these things happening before your eyes. If you enjoyed this video, please click the like button, subscribe to the channel, and leave your comment below to support the channel. Thank you for watching.